Hi,
Hello, this is
everybody.
Jim Hiercheck.
Hi, James. Sorry.
Oh, good morning. There was a silence there, so I thought maybe you were off.
Right.
Good
No, I
morning.
am here. Hi. How are you? You doing well
Pretty
today?
good. Pretty good.
Good.
Yes.
Okay. I'd just like to welcome everybody to this week's webinar. My name is Yvette LaRue, and I take care of all the customer communications at Auto Chartist. I just want to mention that our recordings of past events page is now finally updated. I'm going to be sending you the link to the page during the session, so if you can just keep an eye out for that. James Hiercheck's joining us today, and he's going to be sharing very useful information on how to recognize impending shifts in the market or when sudden changes may be taking place. This information can be used to place stops, to exit a trade, or to enter a new trade. Please feel free to ask questions during the session. We will be having a live Q&A session for a few minutes after the presentation. If we do run out of time, you are more than welcome to email us. It's techsupport@autochartist.com, and we'll address your query there. So James, if you're ready with your presentation, take it away.
Thank you, Yvette. Appreciate it. Welcome to the Making the Switch Between Chart and Fibonacci Patterns webinar. I think this is an important part in your trading strategy, especially since Auto Chartist does all of your work by identifying chart patterns and Fibonacci patterns. Makes things a lot easier, but sometimes market conditions are such that a trader will have to rapidly change plans or alter plans. For example, there may be a pattern they're watching for a while and the market may make a quick reversal like we have been seeing the past few weeks because of intraday news or some sudden change in fundamentals, and a particular pattern changes from a long-term pattern to maybe to a short-term retracement or a short-term reversal in the marketplace. And oftentimes you see a change take place. When you see a change take place, it becomes a Fibonacci retracement or some kind of a retracement of the previous trend. So hopefully we'll be able to go through chart patterns today, and the markets will cooperate by giving us some good live examples of this phenomenon taking place. Okay, the first thing we're going to do is do a quick review of the Fibonacci patterns that Auto Chartist covers, and then we'll cover some of the basic chart patterns, trending and non-trending patterns. So once we cover the review, we'll be able to go into this type of strategy. We talked before a previous seminar about a webinar about using Fibonacci retracements, and just to give you a quick recap, Fibonacci was a mathematician in the 13th century. And during his studies, he discovered a number series which was aptly named the Fibonacci sequence of numbers. And this sequence involved a number count ranging from 0 through infinity. And you can see the count was basically a 1, 1, 2, 3, 5, and so on. What happens is you add one number to the previous number to get the next number. So you can see this thing can go out to infinity. For example, 89 plus 144 would go out to 233. And over time, mathematicians have studied the ratio between these numbers and noticed some key characteristics. For example, if you took 55 divided by 89, you're going to come up with a ratio of 0.618, or 34 divided by 89, you have 382. And 21 divided by 89, you have 0.236. There are different ratios you can look at with this number sequence, and what traders have decided is that these numbers are important retracement points in the marketplace. And so Auto Chartist program automatically identifies these particular levels and puts them on the chart so that as a trader you know when they're coming up or what can be expected. So the Fibonacci retracement as it's called by traders, is created by taking two extreme points, so a major top or a major bottom, and it could be any time period ranging from 15 minute to monthly, and you divide it by the vertical distance by these key Fibonacci ratios of 23.6%, 382%, 50%, 61.8%, and 100% of the move. And once you identify these levels, AutoChartist draws them out on the chart and puts them up. It lets you decide whether these are going to become important support or resistance points later. And ratios play an important part in the marketplace, whether it's a natural phenomena or whether traders just decide that it's a important support resistance point used with in a cluster with another support or resistance point. Either way, these markets, these points tend to turn the markets in opposite directions at times. So it's important to watch because they are critical points and they do lead to reversals. Another thing is it's a natural target level for traders when they see a breakout taking place. They always look for the first retracement level, which would be a 50% price, and then they would look for the next level, which would be a 61.8% retracement. So it becomes very important to a trader, and it is a major part of his toolbox to know where these retracement points are. And as far as clusters are concerned, sometimes traders like to use these retracement points with other things such as a previous top or bottom, maybe a moving average line, maybe a Gann angle or some kind of a trend line or a chart pattern. Okay. Now the first pattern that is very critical to these markets, and it's important that we know, it's called the ABC Fibonacci pattern. It's really ABCD Fibonacci pattern, excuse me. It's really the building blocks of all Fibonacci patterns. And the reason why we talk about it is because once you learn this particular pattern, you'll see it come up very often, and you can also anticipate it in some of the other Fibonacci patterns, such as the expansions and the extensions. And in this pattern, it's categorized, you'll see that's categorized by 3 consecutive swings or trends resembling a lightning bolt. So you can see that from A to B to C to D, it has this lightning bolt type characteristic, or this look. And each turning point, okay, identified again by the alphabetical letters there, represents a significant high or low on the price chart. Okay, this one, A, happens to be the extreme, followed by B, and then you have C, which is a midpoint basically of A and B, and then you have D, which is lower than point B. It's very critical that you pay attention to whether these points are higher or lower than previous levels, because it does become important when you look at other patterns. Okay, so these patterns or swings make up what we call the legs of the marketplace. So a leg would be considered A to B, or B to C, or C to D. Okay, some people call them swings, some people call them trend lines, but they're commonly referred to as leg, AB leg, BC leg, and CD leg. Now, looking at this chart pattern, when you see it show up on AutoChartist, you want to think that a potential market reversal is taking place. Okay, you want to think that this is giving me a sign that something significant is going on in the marketplace, and that I should be paying attention to it. And it helps to identify these possible buying and selling opportunities almost any market over any time period. All right, naturally, if you follow the progression of the time periods, you tend to get more examples on the smaller term charts than you do on the longer term charts. So as far as significance is concerned, if you see something like this coming up on a 240-minute chart, probably carries a little bit more weight than if you saw it on a 15-minute chart. nonetheless, no matter what time period you look at, it's going to still have the same characteristics. It's going to identify something major or some kind of reversal taking place. Now remember that all Fibonacci patterns are based on or include this basic ABCD pattern. And it could provide a strong trade signal when it meets or joins with other patterns. So when you see this pattern taking place, you may want to look at your chart pattern section of AutoChartist to see if something else is developing a bottoming formation. That's the basis of today's webinar, is that you want to use these combinations and know when to switch back and forth between the Fibonacci and the basic regular or the classical chart pattern that's taking place. So in this particular example that I'm showing here from several weeks ago in the market, you can see that this market made a bottom, and AutoChartist identified this bottom as point D, and then it gave these projections to the upside of how it can retrace. Okay, and these range from this 0.382 or this 38.2% level all the way up to 1.618. Okay, so once you see that you have a bottom identified on the Fibonacci, in the Fibonacci section of AutoChartist, then you can use this exclusively and say, well, I'm going to look for an upside retracement. So you can trade countertrend and look for that retracement, or you can also wait for the market to to move back into one of these retracement levels and set up a swing top, and then set up a selling opportunity